Okay, so I took the sniper entry on gold and I want to show you exactly how I got this through this series that we call School of Sniper Entries. I want you to watch till the end in order to get the full in-depth of the knowledge that I want to impart in your life. And therefore, I want you to practically apply it and practice this in your day-to-day after this video. So let's go ahead. As you can see, there is no context of this entry, but this is a real entry that I took. And I want to show you that while I teach you step by step. Okay, so if you're intermediate or advanced trader or beginner, this is, of course, your video. Okay, let's go over here where it's on the daily time frame. Now, I want you to communicate to me quite really fast over here. Um, what trend are we in? And I'm looking at this whole piece here. What trend are we in? What trend are we in? Okay, now you want to answer honestly and not wait for my answer, right? If you want to say we're in a bullish trend, you're absolutely 100% correct. If you say the bearish trend, you're about maybe 20% correct. Reason being, let me just show you that. I have taught you before on this channel that when we are talking about the market actually changing trends and change of character, it needs to break the higher low of the trend that facilitated the new higher high. So this is the last higher low that the market created. The market never broke that, even though this was a pullback, and some could have said maybe this is a bearish trend because of this lower low that was broken, but it is not in the context of a daily time frame. Now, why am I teaching you this? Because when it comes to sniper entries, the very first thing that you gotta decipher in the markets is understanding your trend. What are you trading? And decide to stick to that notion or that decision thereof. So the first thing that I did was that I understood what is the trend. I do ask myself a lot of times. I talk to myself a lot of times. Now, understanding, of course, the market isn't broken this higher low. Therefore, I'm still looking for buys by default of the daily time frame. Therefore, looking at which zones were there, okay, I begin to highlight my zones, but I don't need to highlight all of them. There was a demand, there was a fair value gap on the market as well. But how can I now do that? How can I anticipate that the market can really, or which zone do I now choose from? So you can put a Fibonacci over there, take it from the beginning of that, take it from the highest, and we can see where zones we can pick. In fact, there are two zones we can pick over here. There's this zone right here. In fact, if we label this zone correctly, this is the exact zone, just like this. That is the demand. But within this demand as well, we did have a fair value gap. As you can see, this fair value gap was between the 61. Okay, so let me just label them. We have the fair value gap, and we also have the demand over here. I'm just teaching it as a beginner level. So what do you do when you have two zones like this? You combine them and you refine them right within the middle. So how do I now do that? Go to the 4H. Okay, of course, of hindsight, you can see that the market did use the fair value gap. So when we go into the 4H, I can clearly see now, okay, there's not much information except that the zone over here. Okay, but now I cannot still ignore the fair value gap. So going into the H1 was the best option thereof. Okay, so trying to identify a zone within the fair value gap as well as the demand was really giving me something that I can use over here. Okay, because this was a crucial moment and I was able to identify a zone right within the two as they break above the 61. I could have just said the 61, but then the 50% of the fair value gap is where the market actually does move. So I took then another zone over here. Let me just erase this one so we don't have a lot of zones. Uh, as you can see, this was the fair value gap the market had hit there, and I took over this zone. There we go. Okay, now we can see that we have a zone within the fair value gap. Okay, also, how did I know that the market was actually slowing down? In this, I will show you, but I've taught it within our full smart money breakdown class instead of just waiting all the way for other zones here that we're still within that demand. So how did I now mark this? Or how did I get to this? So this being a demand that's found in the fair value gap, I was already quite very confident. So I had a lot of time to actually prepare for this buy. Reason being is that on Tuesday, the market hit directly on the 50% of the zone. I didn't trade it. I was waiting for more confirmation thereof. Okay. And as it further went up, it came back into the zone again. I could tell that the market is doing something that I love when it comes to reacting off zones that will take off exponentially, where it gives us a drop, base, and a rally. Okay, I love such zones in the sense that even when the market hits on a demand zone like that and behaves that way, I do like it so much because I know we're going to have exponential movement. And given that we had CPI over here, I traded CPI, the sells quickly. On the other account, I had a buy stop right here because I also had buys on pound used in the very same manner, right? I had buy limits rather on this. And as soon as it hit 50% on CPI, I did anticipate with it with my mentorship people when we're analyzing for CPI, predicting it within our sessions, Zoom sessions. We do have them to predict every news event or every if there's no news events, normally we just like Tuesdays and Thursdays. Okay, but in this case, we analyze for every news event. So I did say we're expecting the market to rather hit the zone and go back up into these areas where we can be getting sales, as you can see right now. So given that I did put a buy limit over here, look at that. This is just simple. There's no a lot of terminology that's going around. That's how I picked this. And I just put it slightly below that entry. And of course, I was targeting round about this at the 50% of the supply over here. Okay, I'm already out of the trade hands. I'm just showing you. But yeah, I was targeting this supply zone. The market has already hit that supply zone, as you can see. Okay, and I was targeting this areas. This was a very, very, very beautiful trade. Okay, a very awesome trade, as you can see. So now the entry was somewhere around about the stop loss. I'm not putting it was a 1:8 trade. Okay, it was a 1:8 trade. So as you can see, guys, this was the entry that was taken off the gold setup. And simply what I'm trying to teach you within the School of Sniper Entries family is that you want to go ahead and really understand your daily bias. That's the very first step in all your trading. No matter what you're doing, your daily matters a lot because every candlestick is created within the daily. Yes, your weekly matters depending on what type of trader, but if you're an intraday trader, your daily does matter because it gives you your daily bias. Going into your H1 tools show you valid zones on your chart. So I usually just do that to the H1. I see valid zones on the chart. After I've done that, I move all the way to the 15 minutes. Then I now get to map out my entry, or even under 5 minutes, I map out my entry based on that. So if you can use the very same steps that I'm showing you within this video, daily, H1, 15 minutes, I promise you, you become a way better trader and your win rate is going to skyrocket. And don't overcomplicate it. You've learned a lot of stuff all over the internet. Simplify it just to structure, understanding your trend, identify your supply, your demand, or fair value gap. And from then on, wait for that zone to pull in, identify the triple R rejection, reduction, rejection, the reversal. That's a concept we teach further within the mentorship, by the way. So after using that concept, if you understand it, as I'm just saying it, if you understand it further, the mentorship is available, right? And then from then on, you can now map up your entry, take that entry, stop loss, take profit, leave it to play out and go on with your life. That's how we trade these markets, applying proper risk management on this. Okay. So yeah, definitely, guys, this is the end of the video. And just before we can close off, guys, those of you who've been planning to enroll with us in a mentorship due to the 60% discount that we're having for our 4th year anniversary, please do reach out to us. We did have a small dispute there with the payment system is not working quite properly. Do reach out to our team to assist you in order to enroll for this. It does end on the 15th, so make sure to not miss this type of discount, 60% off our advanced trading costs. So definitely enroll for those who've been waiting and really loving the content that we do over here. Okay, I will see you on the next video. God bless you. Thank you so much for watching.